Let it start for a moment. Producer. It's live right now. I'm just setting some things real quick. You ready?
Yeah.
Right. 3, 2.
I am so ashamed of myself today. I'm about to be a type of person I promised myself I would never be, and that is a troll. Yes, today I am a troll. I am a troll, and I am going to troll on these influencers on YouTube, Instagram, and TikTok. The ones that talk about house hacking, real estate investors, the ones that always talk about buying a multi unit with a FHA loan. Yes. Today, I'm going to debunk a lot of the common videos out there that talk about, I bought this property with an FHA loan. I bought this property and no, I'm a financial guru and I am a real estate mogul, right? We're going to debunk all that today. Today, if you want to buy multi-units using an FHA loan, I am going to give you the true strategies you need to be a successful house hacker, to be a successful real estate mogul with FHA loans and units. All right, guys? Hopefully this video helped you guys out. What's going on? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 p.m. and on Tuesday nights on Instagram. And we post content daily on TikTok and Instagram. So don't forget to check us out on our other platforms. All right. Also, this is an interactive channel. So ask a lot of questions. And if we answer your question or if you found this video useful, please share this video. If you know a family member who's thinking about house hacking using FHA to buy units, tag them on this video. All right, guys? So tonight, we are going to go over how to buy a multi-unit with a FHA loan, the things you should know, and the things and mistakes you should avoid, which these house hackers or these influencers aren't telling you about, all right? So it's really important. You don't have to take notes because you can watch this video again. I recommend you watch it over and over again. It helps my algorithm. Kidding. But yes, I would love for you guys to watch it over and over again, okay? So things you to know, things to know about buying multi-units with a...
Pause for a second. I need to change. We didn't change the titles.
Why?
No, why we forgot to. That's why.
We didn't change the title?
Give me a minute to change the titles because they think they're talking about how to buy and sell.
Oh my goodness. Is this the wrong one? Oh man. Can this apply to...
Give me 2 minutes. Tell everyone, hey, I'm going to pause for 2 minutes.
Give me 2 minutes, guys. We got to pause and change the title really quick. I'll ask Will Garcia's fault. Can this apply to VA? VA, you have to follow a different strategy with VA. But if you would like more information, Will, please give us a call, 714-790-9697. VA is a little bit easier because it doesn't have some of the rules that FHA has, which makes FHA a little bit harder to buy units. Are the new generational houses considered units? I don't think they are considered units. If you're talking about condos, no. So if you're buying a property on a parcel, there's it'll say on title if it's a duplex, triplex, or fourplex. Corey, what's going on? Corey, how you doing? Give me a couple more minutes, guys. You changed the title yet?
I can't change the Facebook side.
Can we change it later?
Yeah, I can change it later.
Let's change it later. Let's get into it. All right, guys. So back to our video. I do apologize for that. Things to know about buying multi-units with FHA. Remember, definition of multi-units. A residence with 2 to 4 units. Hopefully that answers some people's questions we just asked. Anything over 4 units is considered commercial. To buy units with an FHA loan, you don't have to be a first-time home buyer. Going FHA, you can put 3.5% down. You must have at least a 580 credit score. We do recommend 660. Make sure you look up county loan limits for FHA units. FHA units get the same interest rate as an FHA single family home. For units you are not living in, you can use up to 75% of the fair market rent for each unit to offset the current mortgage on the property. So, to debunk a video I just recently saw, someone pointing in the background, this is this apartment complex, which was a 6-unit complex. I bought it with an FHA loan. As you can tell, they were full up, right? The reason why, with FHA, you can only go up to 4 units. Anything past 4 units is commercial. So this person is wrong. They said they bought a 6-unit in Colorado with FHA. No, you can't do that. That's why I knew this person was wrong. Okay? Also, when you buy units, the one thing I do agree, you don't have to be a first-time home buyer to buy FHA. That means if you own a house, you can buy FHA units, but I'll explain in a second how that works. I love the fact that it's 3.5% down and you can buy units. Conventional, you got to put at least 15 to 25% down. Also, I saw someone said that they bought FHA units with a 500 credit score. I'm not saying that does not exist, but it's very slim to none when that happens. So we do recommend 580 to 660 to make sure that you get that deal. Also, I do agree, so I'm not 100% disagreeing with these influencers. I saw someone I bought a unit with a $900,000 unit with FHA. Yes, FHA has a different loan limit when it comes to single family home than when it comes to units, and we'll go over that in a second. And I love the fact that FHA unit rates are the same as single family home. As you know, for conventional, units have a higher rate than single family homes. And I love the fact you can use a future rental income that helps you offset it, okay? So those are the things you want to make sure you know. And let's look at our down payment and loan limits really quick, okay? So with FHA, 3.5% down on units. That's unheard of, right? So you can get in the game with 3.5% down, which I agree. The 5% down gives you the cheaper PMI at 0.80 instead of 0.85. So, depending on your cash flow, you might want to put 5% down. If you feel like it's going to cash flow, then do 3.5, right? You got to run the numbers and tell the difference. And of course, you want to look up the county loan limits for units, different than single family home. Look at this low cost area. Single family home, 420,000. 4 unit, 809,000. When you're buying units, you want to pay attention to what type of unit you have. What is the loan limit? Okay. Look at high cost area, 970. 1.8 million, almost 1.9 for units. So that I agree that these influencers, these financial gurus are talking about when they say they bought a 4 unit or 3 unit for 900,000. I do believe the loan amount, but I don't believe how they did it. Okay. So these are the things you want to know when you're out there buying units with an FHA loan. But here are the 4 main mistakes these guys aren't telling you. And they're full of crap about it. And I sniffed it out, right? I sniffed out the BS. Man, I should troll more often, actually. Okay? So 4 main mistakes when using FHA to buy multi-units. Occupancy issues, having reserves, house hacking, and last but not least, which happens to majority's house hackers and gurus, the self-sufficient rule. Okay? So these are the 4 mistakes that happen consistently. And don't get your hopes up. And you saw something on IG Reels or on TikTok and you realize, crap, why didn't it work? Why didn't they tell me about this? Okay, let's start first with occupancy. So when you buy with FHA, you are buying stating owner occupied. You have to occupy the property within 60 days, right? And live in it for at least 12 months. So some of these people who are house hacking, I looked at one of the properties and I looked at where the person was from. There's no way they were able to buy those units because they have to occupy it. And typically, well, how about they occupy and then they moved out? Typically, people who buy units, 4 units, it's going to be in the same area. If they have other units, typically a lot of people who buy property buy a lot of property in the same area. They don't buy one here, one here, one here, one there, right? Lenders are smart. They're not stupid. They know you're not trying to occupy it. All right, so you want to make sure you buy something that you can occupy in 60 days and live in it for 12 months. So when you do your application, make sure it makes sense. If it's somewhere far away, they're probably going to ask, where do you work? Huh? Like, if you work here, is your job going to let you relocate for these units? No way, right? So I see these people, they're lying. Second thing they don't tell you, having reserves. So when you buy units, you need to have 3 months reserves of principal, interest, tax insurance, and mortgage insurance premium. If your complete mortgage payment is about $5,000, you need $15,000 in the bank account, okay? If it's a 3-unit or 4-unit, when it's a duplex, you don't need those type of reserves. That's one thing I say is not misleading, because not a lot of lenders or a lot of people bring that up. I don't bring that up pretty often. That's something you just talk when you talk to the consumer, but it's not something people are well prepared for, okay? So I don't think I'm going to bust their, balls too hard on that one, but yes, you need to have reserves. Make sure you have that when you're buying units. Now let's talk about house hacking. What they're not telling you. If you own a single family home, it is hard to convince the bank you are going to occupy new units. Having to prove the units is an upgrade compared to your single family home is hard. When using an FHA loan, because it's an owner-occupied property, you want to show you are upgrading when purchasing the multi-unit. The best order is to buy a 4-unit first, then a 3-unit, then a 2-unit, then a single family home. Nearly impossible to have 2 FHA loans at the same time. To finance an FHA unit, to finance FHA, you have to convert it to a conventional loan first, then repeat. And typically when you do that, you need about 15 to 25% equity in your current home before you refinance that, okay? So that's where I see house hacking go wrong. If you already own a property or you own multiple properties, if you want to go FHA again to buy a 4-unit or 3-unit, it needs to make sense. And a lot of times it doesn't make sense. They're not going to believe you went from a single family home to a 4-unit or a 2-unit to a 4-unit. So you want to make sure you follow the order. It works best when you haven't owned property yet. You go 4-unit to 3-unit to 2-unit, then single family home. All right. Also, it is nearly impossible. They talk about how they bought all these units in 5 years. It's almost impossible because you would need equity in your current FHA unit or in your units. Refinance it to a conventional so you can use FHA again. But typically when you do that, you need to have equity. There's no way they gain 15 to 25% equity. Yes, maybe if they bought in 2021, right? 2020, 2021, but before that, no way, not possible, right? So make sure that you understand that when you're out there trying to house hack, that you follow these rules. And let's talk about the last rule majority of these house hackers break, and these influencers break, the self-sufficient rule. And I saw me and this guy battled at it, and he went quiet because he said he bought a 3-unit for $900,000. The 3-unit needed to rent for almost $8,000 for it to make sense because of the mortgage payment. Okay, so the self-sufficient rule. Rules only apply to 3 units to 4-unit. It doesn't apply to duplexes. 75% of the gross rent on all the units, including the unit you're going to live in, must be more than the mortgage payment. Example, if fair market rent is $4,000, the mortgage payment cannot be more than $3,000. If the fair market rent is $10,000, the mortgage payment must be less than $7,500. And it's hard to make it work in Southern California and metropolitan areas. So typically people are going to look places where they're going to have a high chance to have good renters. So it's going to be in a populated area most of the time. So it's going to be in metropolitan areas or Southern California, where I'm from. So when you do the units, it just doesn't make sense, right? You have to find an area if you're going to do units. If you do duplex, you're fine. There's no self-sufficient rule. But when you break into the 3-unit or 4-unit, you got to take the fair market rent, 75% of that, and the mortgage payment has to be under that. That is hard to find when the property start breaking into the 550 purchase prices or higher. When you break into 550, 600, 700, it is hard to find comparable rents to help offset it. Remember, you can only use 75% of it. Yes, you can use the unit that you were supposed to live in as well, but you can use only 75%, which is a lot of times not enough. So when you are out there house hacking, make sure you apply the self-sufficient rule, because I see all these tricks that are out there that are trying to make it work, and it doesn't work. I have a deal right now, not me personally, but my friend. I have a deal. My friend has a deal. I take that back. I don't want to be making up lies, okay? My buddy has a deal. It's in escrow right now. It's a 3-unit. They're trying to claim $2,100 for a 500 square foot studio. They need that amount of money to make the self-sufficient rule work. No, and even though it's in California, no one believes it. So the deal's gonna die, right? So she took this deal deep into escrow, and the deal is going to die because of the self-sufficient rule. And I feel bad for the people. They paid for the appraisal. It's not a cheap appraisal for FHA units either. You got to pay for the standard appraisal and pay for the rent survey for all the units. That money adds up. The home inspection, they're out at least, I think they're out at least the deposit also, because I think they released all their contingencies, and they're out appraisal and home inspection and rent survey. So they're out some money here. So that's why it's really important that you have these strategies down as you're out there writing offers on these units. All right. Hopefully this information helps you out. Okay. If it did, do me a huge favor. Please save and share this video. All right. Also, if you haven't followed me by now, do me a huge favor. Hit that subscribe and notification button so you're notified every time we go live or post any new videos. All right. Also, follow me on my other channels on YouTube, Instagram, TikTok, and LinkedIn. It helps us out a lot. Thank you for all of those who are following us. And if you can, follow us on our other channels, okay? Also, if you have questions or concerns, or hey, I'm thinking about house hacking, but I want you to explain it again, please reach out to us, 714-790-9697. You can always text us or email us as well. And for those of you who just want to DM us or message us, you can go ahead and do that through our Instagram and our Facebook channel. All right? So that right there, my friends, is the key on how to buy units with FHA. Don't listen to trollers. Don't listen. I mean, I am the troller. Don't listen to house hackers. Don't listen to people posting all these videos on Instagram and TikTok. You want to make sure you look up the information. All right, guys? Let's get some Q&A here. Okay. What's going on, guys? What up, Maylin? How you doing? Millon, what's going on? Rosita, what's up? Dolores, how you doing? What's up, John? Jolene, what's good? Will, can this apply to VA? With VA, when you're buying units, you can use up to 75% of the rent. But with VA, you want to make sure you sign up with a rent manager, right? Someone that manages a property manager. If you have a property manager, you can use the rent income to help you qualify. There is no self-sufficient rule with VA. But if you don't have landlord history, you can't use rental income to qualify unless you use a property manager. That's the difference with VA. Hopefully that helps you out, Will. If you have more questions, Will, give us a call, 714-790-9697, right? I think I'm going blank right now. Are the new generation housing considered units? No, they're not. Thank you so much, Corey. Is this still a good time to sell? I would sell, for those of you, why is he telling everyone to sell? I think it's always a good time to sell. If you got to go somewhere, sell the house. If you need a place to live in, then you got to buy, okay? The only thing I would tell you guys to do right now, do not buy and flip. Buying and flip, you want to make sure you have extra money because it's hard to buy and flip right now. You want to make sure you got that money set aside. You should write a book.
For your next house too.
And
make sure they find their next house too.
Yeah, make sure you find your next house too. Should I sell now and wait to buy when the market comes down? It all depends, Shia, if you can weather 12 months, okay? Also depends how much equity you have. I have a friend of mine who's thinking about selling his house, and he's going to pay off all his debt. So he's going to pay off all his debt. His monthly nut right now is about 15 grand a month. And if he sells his house, his new monthly nut's about 7 grand, okay? So he is going to save some serious coin, 8 grand a month. It's worth selling. I think he's going to cash out like $500,000 or something like that, right? He's going to be in a good position. It's worth selling and waiting. Because think about it, if he waits 2 years, he's also going to save, what? If he saves 8 grand a month, that's 96 grand a year. That's almost $200,000 in waiting 2 years. I'm sure with paying off all his debt, having 500 grand at disposal, get an extra 200 grand, he will be in a good position to rebuy. So I told him to sell. And anyone else who wants to buy his property, I would buy it. I would buy it for 1.5. Why? It's the biggest lot in his area. Why would you not? Just chill out. Like if you're gonna live in a house, it's a good house to buy. How long have you to own the property before you sell and not pay capital gains? So Chia, after 2 years, you don't pay capital gains on 250 on single person and married up to 500. Okay, anything over 500 or 250, you have to pay taxes on. Thank you so much, Jolene. Can you buy a duplex FHA and then a few years later depart and buy another duplex FHA? Yes. Don, if you buy a duplex FHA, you have to refinance it to a conventional, and you want to make sure the new duplex is nicer than your current duplex. If it's not, they're not going to believe it. Have you seen any duplex in Orange County that meet $1.2 million loan limit? Yes, I have. I think in Santa Ana I saw something, raw. Waleem, so the self-sufficient rule is the must. You can't just come close to it. No, the self-sufficient rule is a must. And that's why I'm telling you guys, these house hackers are full of crap. Okay? Because I'm telling you, let's say what Raw was talking about, that 2-unit. Imagine a 3-unit FHA for 1.2 or 1.3 million, right? The mortgage payment on that will be way more than 75% of the rent on 3 units. Okay, let's say each unit rents out for $2,000, $2,500. That's $7,500. You're telling me with 3.5% down with PMI, 1.2 or 1.3 million on a 3-unit is gonna be cheaper? Come on, the mortgage payment will be under $7,500. Come on, and you're only gonna use 75% of the rent as well. So that's why I see a lot of people fail, when they're putting these hacks out there, because they don't work. And I want you guys to know about this so you have certainty as you're out there shopping. I'm not saying that you can get units, and I see a lot of people do it, but in specific areas, right? You got to run the numbers. Run the numbers so you can make the right decision. Run the numbers so you don't lose your deposit. Run the numbers so you don't lose $1,000 in appraisal money, all right? Can you convert your FHA to investment property? I buy a duplex under FHA. I also have a second home, but want to buy a primary home. You can convert your FHA into investment by refinancing it, or let's say you don't refinance it. You keep your duplex as FHA, you went out and you bought another home owner occupied, you can. Okay? You can definitely do that. Hopefully that helps you out, Kevin. So let me double check. Can you convert your FHA to investment? Yes, you can do that after 12 months. I have a duplex under FHA, which you can. I also have a second home, but I want to buy a primary home. You would have to buy that primary with a probably conventional loan. Hopefully that helps you out. All right, guys. Thank you for everyone who asked questions. I really appreciate it. If you haven't followed us by now, please hit that subscribe and notification button. Okay, it does help us out a lot. And we want to end all our videos with, our attitude is gratitude. Without you, there is no us. So thank you guys so much and have a great